For Euro USD, I'm going to go over the price action that's formed this week, just to really show the backdrop of how I trade, what I'm looking for, and again, just layering confluences to really drive home the thesis for the trade. So here, when the chart's naked like this, it's hard to sort of understand it and see what is really going on. So I'm just going to concentrate on this little, basically since the start of this week, to see what's been going on, and it's interesting because I'll show you here. So if I go to the monthly time frame again, we have what I look for in price, which is a fair value gap from this candle's low to this candle's high. So I'm just going to mark it here and to there. So fair value gap marked with the blue lines, denoted with the blue lines. So just there to the tip of there. So what you'll see here is the price has traveled up in here. That's what that wick signals. So I'm going to come back down into a weekly time frame. You don't see the fair value gap on a weekly time frame. It looks pretty balanced in there, but this is why it's important to layer through the time frames to really build the picture. That's how you start to understand, because here that just looks random. Why has it came up to this area? Well, it's because you're not getting the full picture. So down into the daily, you'll see here we ran up. Now, in terms of the daily, so in here, as I said, a daily fair value up from this high to this candle low, and there that would be a bullish bull. And there, I'm actually going to make that pretty light, so we'll turn that opacity down. Just I can't leave it at 27, I want it to be 30. So we'll just highlight that. That's a daily fair value gap in here. So I'm going to go down into the 4 hour time frame. So what did we get? This was last week, and we ran up into this area, this fair value gap, the monthly fair value gap between this blue line here and this blue line here. So price came up into there. Now I'm looking, my bias is still bearish. I still think we're coming lower. So once we come up into this area, I want to see how it reacts. What does price do when it gets into this area? So you can see this here is a high. So we ran this high and then we broke the low. So this is a high, this here is a low. So we ran liquidity here on the high. I just knock this along here, make that run a liquidity, and then what we do is we then break this low here. So that's a boss break of structure. So now I'm looking, well, one, we've got this area. So here's, I'm on the 4 hour time frame now. So in here, 4 hours, across here. I'll make this one a bit darker. So if we're going to be bullish, if this momentum is going to continue to then push up into this area, the daily fair value gap, which is this one, or this 4 hour fair value gap, we would really want to see price supporting it to then push higher. What you've also got here is a down close candle. This big down close candle is a bullish order block. So if I just mark that, you will see here we reacted off of it. So bullish order block. And this was part of the reason that I took a long up into this area. Once we came down, ran liquidity, and bounced off this order block, I went long in here. So through stacking confluences, that's what allows us to be able to take trades confidently. So this is me mapped out my bearish scenario, bullish scenario. But then what I also do, so in here, from this high to this low down here, I'll put PD. So you'll see here up to 50%, this is just half by this right in the middle. So up here is what we class as premium, down here is discount. If I'm selling, I want to be selling from a premium. If you're selling something, you want to sell at a premium. If I'm wanting to buy, I want to buy in a discount. I want to buy something when it's cheap. So with this was the last bullish leg here. And price is still up in the premium range. Now, if price, remember, I'm suggesting that the markets are an algorithm. So if the algorithm was to continue its bullish momentum, it would probably want to come into the bottom 50% of this leg. So we're still not in there. So even if we were to continue higher, which I don't think we are going to do right now, I would really want to see price come down here, tap into this lower 50% before seeing a market structure shift and moving higher again. So we're still not into a discount, okay? This is part of the thesis as well for why I was short this evening. So what happened this week? We opened on Sunday up in here. So I'm going to actually, let's just run through it as it played out. Okay, so I'm going to go to a 60-minute chart. So we're up in the fair value gap for the monthly. This is where we closed. We ran up to there, we came down and we closed. We opened up on Sunday evening. We then ran up here. We broke down, and in actual fact, this was all tradable as well, really, because we've got the bias that it was going to come in lower. So this fair value gap in here is probably what you would class as a low risk sell in there, covering the high with your stop loss and then riding it down a bit. I didn't take that trade. I wasn't 100% convinced at the time. So I just let it price play out. Okay. So when I was interested in the trade was we came down into this area. This was Tuesday. So it rallied back up. Still wasn't really anything for me in there. So what I did note though was this here, like this is just really straight. It's really, there's no real structure to it. There is structure, but it's leaving these highs. It's leaving this high. It's leaving this high. It's leaving this high. It's leaving this high. And then what happened? So we tapped this bullish order block that I put on there on the 4-hour time frame, was it? Yep, 4-hour bullish order block. So in here, price, what I'm seeing, we came down to this area. So I'm looking at fair value gaps. There's a fair value gap in here. This is going to be a bearish fair value gap. Okay, there's another tiny little fair value gap in here, 4-hour. And then finally, there was this 4-hour fair value gap in here. Okay. Now, what's really interesting here is that this is what framed my week of trading. So prices come down in here. I wasn't sure of anything in here. I didn't know if we're going to come down here, bounce out of this area and move higher. So I was watching in here, price come down on Tuesday, bounced off the bullish order block, bounced off of here, pushed up into this 4-hour fair value gap. Then price started to just really slowly drop down. Now, this to me was suspect. So just look at that arched over there. So much liquidity. If people are going short in here, their stop loss is going to be here, 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 here. There's never been a run up. Now, the market's run on liquidity. It's looking for liquidity or fair value. So the thing that framed this trade for me was, okay, we bounced off this bullish order block. We then left, see here, these are what we call relative equal highs. So from this high here to this high, that's almost the same. So people will see that as resistance. They'll place their stop loss in this area. And this is what the market seeks, okay? So with this, from here to here, I call that LD, liquidity draw. That was suspect to me. Then we came arching all the way over here, so we've actually just got liquidity here as well. I'm going to stick it there to say here, turn that there, and we'll say soft. So that to me was just liquidity all sat on here. So price came down again. We ran out this old low from the day before. So we'd taken the day before's previous day's low. Then we've seen this here, it pushes up and then it comes down and runs out these lows again, and then it pushes higher. That to me was indicative that price wanted to move higher. So when price retraced back down to here, there's a fair value gap in here. I'm always looking for fair value gaps. Okay, there's a fair value gap in here. Once we came down to this area, I was ready to go long, and I had my stop below here. And so again, I've got a target in mind. So I'm thinking these equal highs is where I think it's going. It could get up to this 4-hour fair value gap. And just look at the way price travels up into there. So I closed the trade at these relative equal highs in here. My trade was closed. I was fine for it to go and move higher. So I'm watching this. We get this high the next day. I'm happy I've had my trade. This high is there, then this high. So the next day, I see this again, liquidity draw. And look at this. It's almost, to me, it's almost like a carbon copy. So again, here. Again, I'm saying, well, these relative equal highs, we've got this consolidation all through Asia. Then if you come on to the 1 hour chart, we've actually got a fair value gap in here as well. Okay. So if I'm looking for something to support price or to understand why price is going down to this level, it's coming down to this fair value gap. I'm going to make that bullish. Might be hard to see. So you would also have a bullish order block in there as well, to be fair. It doesn't get as low as that. But that would be another thing that's going to support price in here, that down close candle. That would support price if it came that far. I would like to see that bounce out of there. But I seen this, and then price maybe clearer on a 5 minute. So we come down into this hourly fair value gap. That's aggressive, always suspect. And then price starts to climb out of here. And there was a news event in here. Unemployment claims were coming on Thursday. So once I seen this high getting broken at 12:30 there, I was then bullish. That news event, this here, unemployment claims, at that point, I thought this is now going to move higher. And I'm saying, right, what's the draw then? If I'm thinking it's going to, why would I think it's going to go higher? Well, one, we've got these soft highs again. We've got these relative equal highs, and we've got this 4-hour fair value gap not far away from these relative equal highs. So again, I'm long. I'm going long in here, got the stop loss below here, relative equal highs, and this time I'm aiming for this 4-hour fair value gap. We come up to this 4-hour fair value gap, I'm delighted. So this is two trades on the trot, and really similar profiles. And this is the thing with these markets, you do tend to get these. Like this is thing. Nothing is the same, but they're similar. Yeah, there's signatures in price that you just get to know, and certain sort of the movement of price. It gives you a good indication of what it's wanting to do. So those were two trades I took, and then so for Friday, sorry, that was today, Thursday, and then 7 p.m. tonight, Fed Chair Powell was speaking. Now, 7 p.m. this hit there at 3 o'clock. You'll see 3 o'clock just down the bottom of the screen there. 3 o'clock it hit there. Now, look at this, it's 6 o'clock, showing 6 o'clock because the timings are different. I'll need to look at that. I'm not sure what's going on there. That'll be because the clock's changed. But so that was 7 o'clock. At 7 o'clock this happened. Fed Chair Powell, Government Bailey. That was the day before. No, so maybe this happened. That must. I wasn't paying attention at this point, but then I must have been, because I took my short in here. I seen this drop, and then it bounced back up. And when I seen this profile again, I'm saying I'm going short in here. This is a short, but just because I've seen this happen so many times with news, bounce, it rallies back up, and you think, oh, it's way to go, and then it just dies, or the opposite way around. You see it push up, and it starts to trickle back down, and then it just goes again. So here, my bias has been short. Although I played a couple of longs, I was bouncing into these fair value. You're just getting a feeling for the where price is going. We're manufacturing these highs. We've got all this liquidity here. Price was just drawn to this area. And if I look at a 4-hour chart now, so I'm in this short, covered the high up here, got the short in here, 30 pip stop loss, quite a big stop loss, but my draw is now down into these lows. This again is like sort of relative equal lows here, across here, pretty equal here, and then these lows, that low, this low. So I feel like now we're showing all the signs from this monthly fair value gap that now my bias is just going to continue to be short until the point that we reach this, and then there's another monthly fair value gap down in here. This here is what I believe to be the draw. So that is going to be my bias going forward. That it's the reasoning behind me taking those trades today. Although my bias is short on the higher time frames, I was able to play this long, and then I was able to play this long. These are very similar setups, and this was reaching for a 4-hour fair value gap, and then this was reaching for a 4-hour fair value gap, and then we've seen this bearish turn in price. Hopefully it's helpful. Hopefully it gives you an idea of the strategy that I use, a bit of the thought process behind it. And if there's any questions, ask away.